So there are definitely some recurring themes, a couple pitfalls from a financial standpoint that we see business owners run into. I'm going to cover 6 of them briefly. One is over-leveraging and just undisciplined borrowing. I think it's self-explanatory, but you need to be disciplined when you borrow money. You need to make the calculations and make sure there's a good margin of safety between your borrowing costs and you can meet them for the long term. Another one is misaligned incentives between a company's management and shareholders. Most businesses have a legal structure that separates the owners, the shareholders, from the managers and executives of the business. A lot of times in small businesses, these groups are the same people. When they're the same people, the incentives are obviously aligned. If they're different people, you have to be very careful and review the incentives and make sure everyone's on the same page. It leads to good behavior. Another thing we see in businesses that leads to failure is speculative behavior. I mean, you'll probably see this more in the financial sector, but just going after things because you think it might play out a certain way, or you speculate that someone's going to pay more for some asset or some business in the future without knowing the underlying intrinsic value. Look at the intrinsic value. There is a difference between being an investor and speculator. Another common pitfall is overpaying for assets or acquisitions. A lot of money is made or lost at the time something is acquired. The price that's paid, price discipline. When you buy assets for your business, make sure you pay a bargain price or at least a fair price. And the same thing goes for making acquisitions of other businesses. A lot of times, business owners see other business owners in their industry doing lots of acquisitions. Acquisitions are sexy. They get caught up in the crowd and they overpay for things, and that's a big problem. Another pitfall is mismanagement of resources of a company. The resources can be a lot of things. They can be tangible assets, intangible assets in terms of intellectual property, human resources. It's very important how a company handles its executives and employees and that treats them fairly, and they feel motivated to do their best job. And to cover one last point, in a lot of industries there's a race to the bottom because of envy, a lot of other reasons. Companies in the same industry lower their prices, they hurt too far, they hurt each other, they're competing for the same customer. And sometimes it's good just to draw a line and say, hey, this is what I'm going to pay or do, and I'm not going to go any further. So to recap, there are many reoccurring pitfalls and mistakes that we see business owners make that lead to failure for the business. And to recap, 6 of them, there's don't borrow too much, make sure incentives are properly aligned for management shareholders, avoid speculative behavior, don't overpay for assets or acquisitions, don't mismanage the resources of the company, and avoid races to the bottom with competitors.